Good morning, guys. Good morning. Sorry I couldn't make the call on Tuesday night, but as promised, there were some quite key things I wanted to go through with everyone on Tuesday, which I said I'll do this video instead. The benefit, obviously, of doing it live is that you can ask me questions. So we're going to lose that benefit with this recording. But please, after you watch this, if you've got any questions, stick it in the group. Because someone else might have the question you've got, but just afraid to ask or whatever. So please use the group to ask the questions so that we can share all the answers to everyone's questions. But let's get lacking. So first of all, I set a task for everybody to write 100 goals. So I hope you've all made a start of that. If not finished it, it's a difficult task, but you need to have them. You need to have your goals clearly defined, because that's what's gonna, when things get tough or when you get a little bit demotivated, look at your goals again, and that is what's gonna really give you that drive to succeed. So pop in our group, just the number 100. Do you know the emoji 100? Drop that in the group if you've done your goals. I want to see lots of 100s filing through. I've done mine. I've been over them again. I've rejigged them because you should look at them over and over and over. So make sure you're doing these tasks, because it really is, there's a whole reason for them, not just setting your homework. There's a whole purpose behind it. Sweet. Right, let's get cracking. So I'm going to go through this sheet with everyone, because I had my first, so when you're a funded trader with FTMO, you get access to their performance coaching. So there's a psychologist basically that will go through your trading plan with you. I did my first one the other day, and it was amazing. I went through all this stuff with her, and she was like pretty impressed, and then she made it even better, which is what I'm going to share with you. So we all know that mindset is the most important thing when it comes to trading. We've talked about it a lot. Jay recently mentioned his experience with chasing a certain amount of profit, and it's very, very easy to slip into that mindset, because especially when you're that close, but also the way we think about money, we've been drilled into us like we need money, we need money, we need money. And a lot of the time, it's, for me especially, I have to relearn the way I thought about money, and now I'm more about feeling good. Money helps. Simple. So the thing that's going to stop you from being successful with trading is the way you decide to take action. When a trade's setting up, do you get in early? Do you call the trade early? I mean, like, you're in it, you're in profit, do you take your money out? Like, there's no way that you're going to lose by closing a trade in profit, but you may lose out on that real growth, what gets us paid. So all these little things, and they're decisions that you make. We talked about being a robot. What I want to go through with you today is, what is your trading plan? All right, I'm going to make it crystal clear what the trading plan is, and I want you all to follow it. Sure, you can adapt it for your own use if you want to, but this came about through months of testing. So please feel free to use it. Don't be shy. Okay, cool. So this is, honestly, I use this sheet every time I trade. This is my trading plan, and it's then what I put into my journal. So my rules: I use Hot Forex only. I don't use any other broker. Hugo's Way, FX Choice, no. Hot Forex. If there's not a valid scan on Hot Forex, I do not trade. Simple. Hot Forex. We use the 1 hour patterns. We want to be with the trend. Ideally, we want to be the third hit. We want to enter on the 15-minute, and we use the scanner source to enter. That is the trading plan. So what goes behind that? We need to know how to identify a trend. That's what your education's for. We need to know how to identify support and resistance. Again, divergence, all those sorts of things, which I'm going to go through with you now. So when I'm setting up a trade, the first thing I do, which I said to everyone on all the calls recently, the first thing I do is zoom out. I want to see, is the market going down or up? If it's going up, we're looking to buy, down, we're looking to sell. So bang, are we at the right place in the market? Are we looking to sell in a downtrend? Yes, right. Now I start filling this out. What pair is it? EJ, wicked. What's the pattern? Shark, wicked. Are we with the trend? That is only ever going to be yes. We don't trade if it's against the trend. So we're never buying in a downtrend or selling in an uptrend. No, no, no. We're always buying with the trend or selling with the trend. Are we at structure? So where the entry is on the scanner, we do a box and go back. Is that an area of reversal in the market before? Has it been at that area and turned around? Yes, brilliant. Is there divergence? Is there divergence? I'm going to go through divergence in a minute, but Sunef shared a cheat sheet, which is brilliant. I'm going to go through it. Is there divergence? Yes. What's the fib level? Well, the fib levels are in the harmonic scanner pattern. So that, remember the blue line in between X and D and B and D? That's the fib levels. So I'm looking for a 618 and a 127 extension. Usually it's a Gartley pattern that will give me a 786 and a 127 extension. Why Gartley patterns are so powerful is because of their fib levels. So I jot the fib levels down. This then, like I say, all transfers into my journal. And then over time, I've got loads of data. Right, what pattern am I best with? I've just mentioned the Gartley. That's not by accident. That's my journal telling me that my Gartley patterns are more successful than my sharp, my cipher. Cool. Still on the hour, I'm looking, is the DC channel hit entry? So has the candle hit the top of the channel or the bottom of the channel at entry? What that basically means, that's a floating support and resistance, that line. If it's not there, then it's not at support or resistance. So it needs to all come together at that one spot. Bingo. Right, now I'm dropping down to the 15-minute. What I'm doing now is I'm looking for entry. I've validated the trade. I'm now looking to enter. First of all, we look for a confirmation candle. Is that present? Yes. So all of this will be in one candle. Is the AO blue or red, depending if we're buying or selling? Yes. Is the stock blue or red? Yes. Is the DMI blue or red and over 40? Yes. Have I done my lot size calculation? Yes. First entry, I'm in. Taken. And I always put in here what the risk reward is. So it's 1 to 4.8. Whatever it is, I put the risk reward in. I won't trade anything less than a 1 to 3. Okay. So all of this information here, this is my checklist. So this is making sure that I'm not breaking the rules. So if I'm getting my confirmation candle, but the DMI is not above 40, I'm not entering. I used to enter. My results were horrible. So all of these things are then, these are all my rules from the setup to the entry. Am I following my rules? That's what my journal is going to tell me. If I'm not following my rules, how on earth am I meant to ever be consistent? The only thing you can bring to trading that you can bring is for you following the rules consistently. The market's going to do things that we don't expect from time to time. News is going to mess up a trade, all that sort of stuff. That's going to happen. That's out of our control. We can only control when we enter the market. We click that button on our phones to trade. And this is going to make sure you're doing it the right way over and over and over again. Now, for those of you that are practicing, you haven't got a journal, you're wasting your time. You have to be journaling. You have to be doing this checklist. You can design your own checklist, whatever, Trevor. But the gains are so real. They've changed things for me personally massively. I have to take it seriously. It's like a job. You've got to document everything. All right, so document. Now, I would probably be filling out one of these in a month. So 6 trades in a month is a lot for me. If I'm filling out more than 6 in a month, then I'm over trading. That's another thing. I'm like mid-month and I've already filled out a sheet. Then I know that I'm not being picky enough. There's loads of little subliminal triggers in here. Keep me on my game. All right, because no one else is going to. You've got to analyze yourself to make sure that you're making the most of your trading opportunity. So I'm going to share this in the group. please, please, please feel free to save it and adapt it if you want to. I'll do that after I've done the recording. But please, please use this tracker. Now, if you want to level it up, now this is what I did, kind of in a way, but not as officially. If I've now got a little piggy bank on my desk, and my piggy bank, actually, when I follow all the rules when I trade, I put £1 in that little pot. So I'm rewarding myself for following the rules. Whether the trade rewards me or not, I'm putting £1 aside every time I enter a trade and I've followed all the rules. And what I do with that money is then I get to the end of the month and I'm hoping that I've got tenner maximum. I've got money in that pot, maybe over 6 months. So then it's like a little treat savings pot. And I go out with H. That's my plan with it. I'm going to take H out, be like, look, we're going to spend this money and have some fun. Go to the arcade. Loves the arcade. The other way you can do it is you can do it for if you break the rules. So if you're a rule breaker and you want to have a consequence rather than a reward, your consequence could be to put £1 in that pot. All right, but if you're trading and you're breaking rules consistently and there's no consequence, like it's just training your mind. You're training your discipline. Whether it's a reward or a consequence, you need to be vigilant that you're following the rules at every single stage of setting up to entering a trade. All right. So I'm doing that. I think you should all do that. You should all be using a checklist, a journal, and a money pot. All right. Get that going. Get that going. Okay, cool. Because I've got no one on the call, normally I ask questions. I'm kind of rattling through this. It's not going to be a long one. But last but not least, I want to go through divergence. So Suneth kindly shared these cheat sheets. You can get them on Google, they're everywhere. But basically, the AO is our indicator, the price of the candle. All right, so I wouldn't worry too much about bullish and bearish and blah, blah, blah. Like, you don't need to say, is it exaggerated or regular or hidden? It doesn't matter. All that matters is that the price is doing the opposite. The price is doing the opposite to the indicator. So if the price is making lows and the indicator is making higher lows, that is divergence. That is going to signal a reversal. It's the same for every single one. That's making highs, that's making lows. Making highs, that's making lows, or lower highs. Exactly the same. It's the same in an exaggerated divergence. That's where you get like an equal low. Again, it doesn't matter. Is the market doing something different to the indicator? All right, there's an example of this everywhere. If I just show you what I'm looking at on NZD CAD, all the time. All the time. So usually I would go from swing low to where we are now. So the last hit on the trend to where we are now. You could go from here. But really, first of all, I'm looking close to price. Price is coming down. Yeah, it's going staircasing down heavily. Heavily. So in here on the AO, I'm looking, right, it should represent the same shape. But you can clearly see that there is divergence. So this low to this low is going up, and then this low is going down. Quite aggressively down. If we spot this place, so this last swing low, it's a bit far away. You see that there's been like loads of flips on the AO. So not ideal, but I'll go through that in a second. But look, if we go from this low, and look, there was 3 lows here all at one point. They all hit the same level, but on the AO, going up, and then hey ho silver, bosh, we had a huge reversal. But what we want to look at is that last hit where the market is now. Yeah, the market is going up. This low is higher currently than this low, but the AO is going down. That is divergence. So we've got double divergence. That is all divergence is. You can see it. I would practice. I look for divergence on the 1 hour. The 15-minute, you normally get more and more examples. Divergence has less power in its reversal. So the hour, I do all my analysis on the hour. The 15-minute is just for entry. Just for entry. All right, so familiarize yourself with the cheat sheets, practice, practice, practice. And then last but not least, all right, last but not least, this is where, if you're serious about being a pro trader, trading a hedge fund's money for your gain, I want all of you to do this. This will level you up and give you confidence in what we're doing. This took me months, all right, months to do. I'm going to start doing it again. So on your watch list, you can just list all of the currency pairs. Yeah, all of them listed. I'll go from top to bottom. You can pick whatever you want. You can do just majors, minors, whatever, exotics. But what I want you to do is I want you to go back in time, and you might need the 4 hour for this just to see a wider view. And all I want you to do is look at, right, when the market's going up or going down, when it has a third hit, what happens? All right, so this is pretty much perfect. Look, low to high, we've got 1, 2, third hit. Right, what happens when it hits the third time? All right, we can see, because we can see what's happened. Look, it takes off to the moon. Yeah, so if we were entering this trade, let me just put a line. We can find it. Let's go back on the hour. Right, this is where your confidence and your sort of trust in the system and process. Right, this is our third hit. We've got 1, 2, 3. So if we were setting up this trade, we'd be like, right, okay, it's come through. The second hit, what's the fib level? From low to high, we've got 50%. That goes in the journal, 50%. You'll probably have an X to D in here somewhere. Fib level. We have the 1618. See that, the 1618 and the 50%, bang on. Wicked. So we've got good fib levels, both reversal areas. 50% represents equilibrium. I prefer a 618. When it's on a 1618, that's the golden phi number. Looking now, is this a previous reversal area structure? Well, would you look at that? High, break, bounce, break. We've got a bit sloppy. Another floor, and it's now coming back to that area. Bosh, at a 1618 and a 50% level. Cool. Have we got divergence from here to here? No, the market's making lows. AO is making lows. There is a bit of divergence here. You see here it's going down. And here it's slightly going up. Let's look from the swing point. Okay, so that's good. So swing point here is going up. Here to here. It is massively going down. So we've got divergence everywhere. Bang. We're setting up the trade, third hit. Third hit. We've got the DC channel hitting on the hour. Bingo. We are now dropping down to the 15-minute. I'm going to have to scoot back again. And this should be something, take half an hour a day. Once you've done all the videos and you're practicing, this is where your practice should be taking, not just taking trades. This is called back testing. Go back as far as you can, as far as you want. Do it for all pairs. Make a spreadsheet. So you've got, right, AUD CAD, this date, there was a third hit. What was the result? The setup. It's just like your journal, but you're doing it for backtesting. So let me find it. What is going on? Black with a banner in the works, doesn't load. Wait, was that? Okay. Depending on what package you've got with TradingView, you may or may not be able to go back that far on the 15-minute, but it's useful on the hour. You're not going to get the entries like the risk reward perfect, but what I do want you to look at is, right, what did happen? Did it go and take the high? So look, the high that we would be looking for it to break, this one. That's the previous high in the market. Yeah, it's making its way up from the origin. That's the high. What happened? Well, look, we can see that it took the high and it hit the 127 extension. Tick. After you've collected loads and loads of data on how often this happens, you'll see why the rules are the rules and why I do not bend from them. Because the results are ridiculous. It's ridiculous. It's literally ridiculous. That will show you why I'm patient. It will show you why I don't look at the second hit. First or second, I want the third hit. So all of you, I start collecting data, start collecting confidence in the strategy and the setup and the reasons for why we do things the way we do it. If you're not too bothered about that, then please just follow the plan. Backtesting for me was how I found this. Manny says about it in his videos, like I trade the third hit. I'm looking to trade with the trend. I enter use a scan source. I only use hot forex. He sort of dribbles it in during his videos, and I made a list, and that's how I used it to backtest over and over and over again. And then you combine that with the harmonic scanner patterns, and everyone's groovy, right? Everyone's happy, right? So I'm now looking at, I think Suneth popped this in our group recently, is NZD CAD. Again, you've got the high up here. Now coming for its third hit. All right, so again, we've got structure. It's just reached through structure. It may go a little bit further, given the fib levels here. If it gets to the 88% and the 3618, that is like a banking level. The fact that it just blew through the 71 and the 2618s, it's in a hell of a lot of momentum. So I could see it breaking through the trend line before it then starts to reverse, if it reverses. So I'm looking at, I showed the divergence before on with the line here, and the market's making highs or higher lows and lower lows on the market. So now I'm just waiting. I've already got my alert set for the 15-minute candle. So I'm waiting for my confirmation candle. And then we're going to ride this puppy up. And that's it. Just pull the trigger every time it goes. Every time it does what it needs to do, you pull the trigger. Simple as that. So I hope you found that helpful. It was a bit of a rush call. It's a bit weird doing these calls without anyone interacting. So we'll be back to Tuesday night this coming week. I'm going to be doing some more videos on just other stuff. Like I've got my risk management video on YouTube. That's well worth watching. It's only like 20 minutes and it gives a breakdown of how to do your pips, how to use the tools, and how to use that in the lot size calculator. And then that's how you get your lot size. So you have to be able to manage risk. Only only saving grace to us not blowing accounts left, right, and centre. So work out your risk, put your 100 goals in, ask any questions. If you've got any other suggestions about how to make sure you can follow your trading plan to the letter every time, then please share. But yeah, until Tuesday night, guys, I will see you there, and I'll see you all soon. Take care.